Welcome back to the Malaysia Money Matters show. It's February 6th, 2025, and we got a lot to unpack today.
Yeah.
We've got some Malaysian companies making big moves and some international news that could have ripple effects right here at home. Ready to dive in.
Absolutely. Let's start with what's happening on the ground here in Malaysia. Some of these
Right.
stories could signal big shifts in the market.
First up, we've got news about Malaysia's 5G network. The subscriber numbers are pretty eye-popping.
Right.
18.19 million already, which is over half the population. The communications minister is calling it a success story, but what's the real takeaway here for investors?
Well, it's interesting because the government went all in on a single wholesale network, the Digital Nasional Berhad, or DNB for short. That was a risky move, but this rapid adoption rate suggests it might be paying off. 82.4% coverage in populated areas means businesses and individuals are jumping on board quickly.
So potentially good news for DNB and the telcos involved in the rollout. But what about the broader economy? Does widespread 5G actually translate to tangible benefits for businesses?
That's $1 million question. Faster internet is great, but it's only as good as the applications built on top of it. We need to see companies leverage this technology to create new products and services, improve efficiency, and ultimately boost their bottom line. That's where the real economic impact will come from.
Speaking of companies looking to boost their bottom line, Joo Resources just made a significant land acquisition in Kedah, 437 acres for RM 96 million.
Wow. What's the strategy behind this move?
This is all about positioning. Kedah is attracting major investment in high-tech manufacturing, semiconductors, electric vehicle you name it. And Joe's move suggests they see a huge opportunity in this sector, and they're grabbing prime real estate while they can.
And it's not just Joe. CapitaLand Malaysia Trust is also making moves in the industrial space, snapping up 3 properties in Senai Airport City down in Johor for a cool RM 72 million.
What's driving this trend?
Johor is transforming into a manufacturing powerhouse. With its strategic location and robust infrastructure, it's attracting a lot of foreign investment, especially in sectors like electronics and logistics. CapitaLand's acquisition is a smart play to capitalize on this growth.
So we're seeing a lot of activity in the industrial sector. It's not all about factories and warehouses. KLCCP Stapled Group, which owns some prime real estate in Kuala Lumpur, including Surya KLCC Mall, just announced a 12% jump in profits for Q4.
That's impressive. Their full ownership of Surya KLCC Mall is definitely a contributing factor. It's a prime retail destination, and they're reaping the rewards. Plus, they're sharing the wealth with investors, announcing a record dividend payout.
That's always good news for shareholders. But even amidst these success stories, there's a sense of caution in the air.
Right.
Khazanah Nasional, despite reporting record returns for 2024, is just predicting a more challenging year ahead.
Yeah, they're right to be cautious. High U.S. interest rates and potential volatility in global trade policies are definitely factors to consider. It's a reminder that even in a strong market, external forces can have a significant impact.
So it's a mixed bag of optimism and caution. Now let's talk about a potential windfall for some investors. LPI Capital, recently acquired by Public Bank, is required to sell its 1.1% stake in the bank.
Oh, right.
What does this mean for shareholders?
This could translate into a hefty special dividend. Analysts are predicting a yield of up to 18%, which is a significant boost. And it comes at a time when LTI Capital is expected to have a strong year overall, thanks to reduced exposure to flood-related insurance claims.
So a bit of a silver lining for LPI Capital investors. Now on to a company undergoing a leadership transition. Hexstar Industries, their chairman is stepping down just as they're making bold moves like venturing into the food and beverage industry with Luckin Coffee.
Interesting.
What's your take on this?
Leadership transitions can be a bit of a wild card. They can be a catalyst for growth or a source of disruption. It all depends on how the new leadership navigates the company's existing businesses and their ambitious new ventures. It'll be interesting to see how this plays out.
Speaking of interesting, City Global B has acquired a prime piece of land on Jalan Tun Razak in KL for RM 73 million, but they have no immediate plans for development.
Okay.
What's the strategy behind this?
This is a classic example of strategic patience. They're holding on to this asset, waiting for the right opportunity to maximize its value. In a volatile market, sometimes the best move is to wait for the right moment to strike.
Patience is a virtue, especially in the world of real estate. Now let's talk about YTL Corp. Their subsidiary, NSL Ltd, has been given a 4-month extension by the Singapore Exchange to meet the 10% public shareholding requirement. What's the story here?
They recently acquired a larger stake in NSL, pushing their ownership above 90%, which triggered this requirement from the Singapore exchange. The extension gives them some breathing room to figure out how to reduce their stake and comply with the listing rules.
Sounds like they've got some work to do.
Mm.
But on a later note, Tropicana Corporation is going all out to attract home buyers with their CNY Prosperity campaign. Over RM2 million in incentives, including furnishing packages and coverage of legal fees.
Well,
It's a pretty sweet deal.
wow, that's very generous. It's definitely a sign of a competitive property market. Developers are pulling out all the stops to attract buyers, and this campaign seems to be targeting those looking for a little extra incentive to take the plunge.
Finally, let's talk about ITMax Systems. Their subsidiary, SouthMax, just secured another contract in Johor, this time for the outdoor parking system in Ponchon District. This marks their 6th contract in the state.
That's great.
What's behind their success?
They've carved out a niche for themselves in the digital solution space, particularly in parking systems. Johor's rapid development is creating a demand for these types of services, and ITMax System B is clearly capitalizing on that opportunity.
So from 5G to industrial land grabs to strategic acquisitions and leadership transitions, it's been a busy week for Malaysian companies. Before we dive into the international news, what are your initial thoughts on what's happening here at home?
What strikes me is the contrast between cautious optimism and bold moves. We've got companies like Khazanah expressing concerns about global headwinds, while others like Anzhou and CapitaLand are making significant investments betting on continued growth. It'll be fascinating to see how these competing narratives play out in the coming months.
I totally agree. It feels like we're at a crossroads, and the decisions made now will have a big impact on the future of the Malaysian economy. But before we get too far ahead of ourselves, let's shift our focus to the international stage and see what's brewing out there.
The international scene is definitely serving up some drama this week. Trade wars, tech shakeups, and a potential automotive mega merger hitting the brakes. It's a lot to digest.
Let's unpack it piece by piece. First up, the U.S. seems to be playing hardball on trade-slapping tariffs on imports from China, Canada, and Mexico. What's the rationale behind this move?
Well, the official line is about protecting American jobs and industries. But some analysts see it as a way for the U.S. to gain leverage in trade negotiations and reshape the global economic landscape to their advantage.
So, bit of a power play. But what does this mean for Malaysia? Are we caught in the crossfire?
It's a complicated picture. In the short term, Malaysia could actually benefit. As companies look for alternative manufacturing hubs to avoid those tariffs, we might see some of that investment flow our way. Think of it as a potential reshuffling of the global supply chain.
So a potential opportunity amidst the uncertainty. But what about the long-term implications?
Those are harder to predict. If this trade war escalates, it could lead to global economic instability, which would definitely impact Malaysia. We're a trade-dependent nation, so any disruption to global trade flows will be felt here.
Okay, so it's a wait-and-see game for Malaysia. Now let's talk about something that's sending shockwaves through the tech world. DeepSeek, a Chinese AI startup that's making waves with its powerful and cost-effective AI model. What's all the fuss about?
DeepSeek is a game changer. Their AI model is not only incredibly capable, but it's also significantly cheaper than its competitors. This has caught the attention of businesses and governments worldwide. But it's also raising some eyebrows, particularly when it comes to security concerns.
You've seen countries like Australia and South Korea ban DeepSeek on government devices,
Yeah.
citing security risks.
Right.
Is this a legitimate concern, or is it just fear of competition?
It's probably a bit of both. DeepSeek's rapid rise has certainly shaken up the established tech order, and some countries are wary of relying on technology from a geopolitical rival. At the same time, there are legitimate questions about data security and potential misuse of AI technology that need to be addressed.
Speaking of established tech giants, Alphabet, Google's parent company, seems to be feeling the heat. Disappointing earnings, slowing cloud growth, and now the emergence of DeepSeek as a competitor. Are the cracks starting to show?
They're definitely facing some challenges. Investors are questioning their massive AI investments, and the competition is heating up. But Alphabet is a formidable company with deep pockets and a history of innovation. They're not going down without a fight.
They've been highlighting their Gemini suite of AI products and emphasizing their commitment to responsible AI development. It's a battle for AI dominance, and it's going to be fascinating to watch how it unfolds.
Absolutely. The stakes are high, and the implications for the future of technology are enormous. Whoever comes out on top will have a significant influence on how AI shapes our world.
Now let's shift gears to the automotive industry, where a potential mega merger between Honda and Nissan seems to have hit a roadblock. What happened?
Well, it seems the honeymoon phase is over. less than 2 months after announcing their intentions to merge. They're already bumping heads over the details. Friction has emerged over Honda's potential acquisition of Nissan, and the future of the deal is now uncertain.
This was supposed to be a merger of equals, but it sounds like Honda might be trying to take the driver's seat. What does this mean for Nissan?
It's a tough spot for them. They've been struggling in recent years, and this merger was seen as a way to revitalize their brand and gain a competitive edge. If the deal falls apart, it raises questions about Nissan's ability to turn things around on their own.
It's a high-stakes game of corporate chess, and it's far from over. Now let's wrap up with a look at Mexico's response to those U.S. tariffs. They seem to be taking a more measured approach compared to some other countries.
They're playing it smart. They've made some concessions like deploying troops to the border to address U.S. concerns about immigration, but they're also pushing back, coming to the table with their own demands, including addressing the flow of weapons from the U.S. into Mexico.
So it's a delicate balancing act, trying to appease the U.S. while also protecting their own interests. It's a reminder that in the world of international diplomacy, every move has consequences.
Absolutely. And those consequences can ripple outward, impacting countries far beyond the immediate players. It's a complex and interconnected world out there.
It seems like every corner of the globe is buzzing with activity, and it's all interconnected in some way. Before we wrap up, I'd love to hear your take on what stood out to you the most from all this international news.
What's fascinating to me is how the DeepSeek story highlights the shifting balance of power in the tech world. For years, Silicon Valley has been the undisputed leader, but now we're seeing serious competition emerging from China. It's a reminder that innovation can come from anywhere, and it's going to be interesting to see how this new dynamic plays out.
That's a great point. It's not just about technology either. It's about economic influence and geopolitical power. DeepSeek's success could have far-reaching implications, and it's definitely something to watch closely. Now let's bring it back to our listeners. What are the key takeaways they should be thinking about after this whirlwind of news?
Well, first and foremost, it's a reminder that we live in a volatile and interconnected world. Events happening thousands of miles away can have a direct impact on our lives and our investments here in Malaysia. Whether it's trade wars, technological advancements, or political maneuvering, it's crucial to stay informed and understand the potential ripple effects.
So knowledge is power, as they say. But it's not just about absorbing information, it's about understanding what it means for you personally. How can our listeners use this information to make smarter decisions, particularly when it comes to their finances?
That's where critical thinking comes in. Don't just accept headlines at face value. Dig deeper, analyze the information, and try to connect the dots. For example, if you're invested in a company that relies heavily on exports, those U.S. tariffs could have a negative impact on their bottom line. Or if you're looking to invest in the tech sector, the rise of DeepSeek could signal a shift in the competitive landscape. It's all about understanding the potential risks and opportunities and adjusting your strategy accordingly.
So stay informed, think critically, and be prepared to adapt. Any other words of wisdom before we sign off?
Remember that even in times of uncertainty, there are always opportunities to be found. The key is to stay curious, keep learning, and be willing to embrace change. The world is constantly evolving, and those who can adapt and innovate will ultimately thrive.
Well said. And it's exactly what we strive to do here at the Malaysia Money Matters Show. Bring you the insights and analysis you need to navigate the complexities of the financial world. So to our listeners, we encourage you to subscribe to the podcast and join us each week as we deep dive into the news that matters most. Until next time, stay informed and stay ahead of the curve.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.